humans will continue to make the same mistakes that they have made in the past. I mean, they get fearful when other people are fearful. I mean, you saw it in those money market funds when 175 billion, flowed out in 3 days. I mean, when people get scared, it's very, very pervasive. I've often thought that, if I owned a bank in a 2-bank town, if I were inclined to, I might hire a whole bunch of Hollywood extras to form a line in front of the other guy's bank. I mean, the hell of it is that they, as soon as they got through forming a line there, they started forming a line at my bank because people really get fearful en masse. Confidence comes back sort of one at a time, but when they get greedy en masse too. I mean, it's just the way the humans are constructed. That's where Charlie and I have an edge. We don't have an edge particularly in many other ways, but we are able, I think, perhaps better than most, to not really get caught up with what other people are doing. And I don't know whether we learn that over time or what, but when we see falling prices, we think it's an opportunity to buy it, and it doesn't bother us. Now, we don't own things on margin, or we don't get ourselves in a position where somebody else can pull the rug out from under us, and that's enormously important in life. You never want to get out on a limb, and of course leverage gets very tempting when things are going up, and leverage what was introduced into housing in a huge way. I mean, people just felt that you were an idiot if you didn't keep borrowing more on your house and maybe using that to buy more houses or using it to live on or whatever. And then finally the roof fell in.
And it doesn't make any difference how sophisticated people are, whether they've got PhDs or anything else. When they are afraid, they are afraid. I know a number of people that would surprise you who during that panic period subsequently, went right to gold and felt that nothing would be worth anything. And, I mean, people really, fear is extraordinary with most people. That's the advantage I've got. I mean, frankly, it isn't IQ. I'm not going to get fearful about the United States over time.
Do you draw any parallel or connection between the crisis 10 years ago now and the politics of today and the distrust of institutions and governments? And
sure. People have long memories, just like they did after 1929. It took a long time. I mean, people, when they experienced extreme fear, it sears something into them where they want to know who did it to them, and they correctly don't blame themselves. I mean, they're not supposed to be finance experts or anything. All they did was buy a house and lie a little bit on their loan application. Just figured it was going to go up, and then they'd refinance and so on. I mean, who's going to blame anybody for that? So it's still affecting. When I went to school at Columbia in 1950, we still saw in stock valuations and things like that, prices people would pay for businesses. We still saw the fear from 29, and you have the number of people in the stock market in 1929 compared to the number of homeowners in 2008, there's no comparison. So this was deeper in that sense.
Where we are today, do you worry about another crisis?
Well, there'll be one sometime, but no, I don't worry about it in the least.
Because
I conduct myself so that if there's another crisis, I'll still be around. Berkshire will be in good shape.
But when you look around and to the extent you worry about anything for the country, if not yourself, what do you look around today and say, okay, I got to be anxious about that?
Well, I don't see big signs of anything now, but that's the nature of things early on. But asset appreciation draws in people that really don't know anything about the asset. And they start being interested in something because it's going up, not because they understand anything else, but the guy next door who they know is dumber than they are is getting rich, and they aren't, and their spouse is saying, can't you figure it out too? And I mean, it is so contagious. So that's a permanent part of the system. But in terms of the specific excesses, I don't see them now. No.
Investing is really not complicated. I mean, the basic framework for it is simple. Now then you have to work at it some to find the best pockets of undervaluation maybe or something. But you didn't have to have a high IQ. You didn't have to have lots of investment smarts to buy junk bonds in 2002, or even to do some of the stuff that was available when LTCM got in trouble. You really just had to have sort of the courage of your convictions. You had to have the willingness to do something when everybody else was petrified. But that was true in 1974 when we were buying stocks at very, very, very low multiples of earnings. It wasn't that anybody didn't know that they were cheap. They were just paralyzed for one reason or another. And that the lesson of following logic rather than emotion, is something that it's obvious, and some people have great trouble with it and others have less trouble.